Welcome to ShortView Trading. This is your morning market hit for Thursday, 4th of March. What matters today for traders? Well, the downtrend in US equity indices continues. And yesterday we talked about a number of asset prices being poised at key levels. And indeed yesterday, many of them started to fail. Take the S&P 500, for example, which have been holding up nicely at its Fibonacci key golden ratio retracement level. That's around and above the 38.78. Well, yesterday that level was meaningfully breached. And we saw the S&P selling off quite sharply throughout the trading session and making a new multi-week low. And now, of course, the key question for the S&P 500 is it going to hold its 50-day moving average? As you see in the chart in front of you now, the 50-day moving average and the pennant formation that's been forming in the S&P 500, or indeed is it going to break lower to much more meaningful and stronger support that you see at the intraday lows from the 1st of February and the 4th of January this year around the 36.52.57 level. Or equally, other poor price action we saw yesterday, of course, the Nasdaq 100 breaking meaningfully lower back at its key neckline that we've been flagging up in videos over recent days. That's around the sort of 12,600, 12,650, 700 level. Or of course, some of the key large cap tech names like Facebook, which was breaking its 200-day moving average yesterday, as you can see the chart in front of you now, or indeed Amazon, same situation, both of which we've been flagging up over recent trading sessions. So key levels are starting to break. We see that in second line tech stocks as well. Tesla's a great example. Or look at a whole host of these second line tech stocks that have been very much the center of attention in recent weeks and months, whether it's Peloton, Zoom, Salesforce, or so on. All of them having really poor days yesterday. Nikola, Neo, and so on. So there's a lot of pressure that's come to bear in tech. A lot of key levels that are breaking, and the question is, where do we go from now? And of course, in that respect, it's helpful to look at what our market timing models are doing, the 1 to 2 week short-term market timing models that we like to look at every day in the daily rag. And interestingly, as you can see from this chart in front of you now, if you look at our short-term risk appetite scoring system, it's now back on buy, just reached those levels. Other models are starting to get there or already just about there. So technically the market's oversold. Put to call ratios have been moving, fund flows, etc. So to see how we're playing this, please see today's daily rag available to subscribers via the website. In that, we update all our key short-term market timing models, as well as our 1 to 2 week view on equity index futures and how to go about trading this market. It's available for a free trial, 7-day free trial. Simply click on the link below and put in your name and your email address. No need to give credit card details, and we'll give you a free trial of the rag for 7 days. Or if you like what you hear, please sign up. It's $49 a month, cancelable at any time, nothing further to pay. So what are we watching today? Well, there are 1 or 2 bits and pieces coming out on the macro data, including US productivity and labor costs this afternoon. That'll be interesting. Equally, we've got some retail sales out of Europe and 1 or 2 other bits and pieces out of the States, including things like the Challenger job cuts. Jerome Powell later on is in a conversation on the US economy that'll be live streamed. Over and above that, there are bits and pieces on earnings across the globe. So that's it from us. That's your morning market hit for Thursday, 4th of March. Thank you for listening. Please do subscribe to these free videos on YouTube. Simply search under ShortView Trading or follow us on LinkedIn, Twitter, and or Facebook. Thank you for listening. Stay safe. Trade well.